Let's see what it means to capitalize on these opportunities as an investor. So how do you capitalize on the growing demands of rentals, the growing demands of housing, the growing demands of units in apartments? As investor, we just need to focus on areas with strong economic fundamentals. That's what it is. This means looking at cities and neighborhoods in those emerging markets with job growth, new infrastructure, and new government investments that favors investors. For example, Fort Worth is really undergoing significant development in the form of transportation and commercial hubs, positioning itself as an emerging market with long-term potential also too. When you look at titles like that, those would inform your investing decisions also too. Similarly, also too, when you look at Austin, critically, the rapid expansion of its tech sectors and the role of tech hub is very powerful when it comes to driving rental demands. Very powerful. Those two, we should look at those two. So as an investor, it's important to track these growth patterns closely. You want to find neighborhoods that are just starting to show signs of growth before they become too expensive for the average investors. For those of you that are starting out newly, you want to really look back and say that, okay, I need to get in the tides. You know, there's a wave of investment that starts from little, then creeps up, and before you know it becomes expensive. So that's what you got to look at for when it comes to emerging markets, ahead of the curve also too. What are my actionable tips that I can give you? Research migration. I can but stress that. Research migration patterns to pinpoint areas with high potential for growth, because when you follow migration, you follow the direction of where jobs will be. People will typically move where the jobs are. People will typically move where they think there's affordability. So when you track migration, evidently you can be able to track where there's high potential for growth. What about leverage? You got to leverage market data to predict demand before prices rise. You have to look at some of the leverage titles. Look at data that will predict before rising of rates, even in the aspect of buying, or if it means you're selling. You have to track all this and have it under your belt before it gets to a point whereby it would sabotage your either buying or your selling.